Hey guys, so tax planning strategies to legally lower your taxes in 2025. So, welcome, in today's video, we're going to be diving into some tax planning strategies to legally lower your taxes in 2025. Now, taxes are like one of the biggest expenses that most people face, but with the right strategies, you can significantly reduce what you owe legally and ethically. Now, whether you're a self-employed individual, maybe you're a business owner, or you're just looking to maximize your deductions, this presentation is packed with actionable insights. So let's kind of jump in and let's get started. So many people believe that they're stuck paying high taxes, but the reality is that, with proactive tax planning, you can keep more of your hard-earned money. Now, in this video, we're going to break down is how do the different tax brackets work and like how to manage your taxable income. We're going to be talking about like what are the best deductions and tax credits for 2025. We're going to talk about business tax strategies from entrepreneurs and self-employed individuals, and also be talking about some advanced tax savings techniques, including investment and real estate planning. Now, let's start by understanding like how tax brackets impact your overall tax liability. So the U.S. tax system is progressive, and that just means that like the different portions of your income are taxed at different rates. And here's an example. So let's say that you earn, $50,000 as part of your income, and if you earn $50,000, part of your income is going to be taxed at a lower rate, and a part of it's going to be taxed at a higher rate, right? So, for example, then the next thing is going to be like if you make $100,000, you don't necessarily pay the highest tax rate on all of it. You just pay on the portion that falls into the tax bracket. We can talk about what different tax brackets are a little bit later. But this is why like tax planning is so critical because keeping your taxable income within lower brackets can help you reduce what you owe. And there's a lot of different ways you can do that. One of the most common ways is through either paper deductions or through really looking at different deductions we can take. And we're going to cover that in like 1 second. But even if you let's say that you potentially could make the most amount of money, there's always something where it's like, should you have instead like reinvested some of that money inside of your business? Is there a different tax deduction you can use? Is there a way you could have made your life better without necessarily having that income hit the bottom line? So, in terms of really understanding tax brackets, let's talk about some ways to like manage your taxable income, right? So number one could be deferring income. So let's say that you're like close to moving into a higher tax bracket. You can delay when you take bonuses or payments from like potential clients or just in general to the following year. Also, what you can do is you can start accelerating deductions, so you can make additional like deductible expenses before year end, so you can start like lowering your taxable income. Like one thing that's like very common for business owners is that like let's say that you could spend some extra money inside of an advertising strategy that could bear fruit within like 30 or 60 days. So a lot of business owners to like really kind of reduce their taxes, they'll do like a very like big end of year like advertising campaign to get a bunch of leads inside of like their business to then capitalize and like get a return on that in the new coming year. So that's called accelerating the deductions. Another thing could be called income splitting. So business owners can pay family members for legitimate work, shifting some income to a lower tax bracket. And now there are limitations to what you can do, so that's why it's like really important to work with like a tax professional or a tax strategist like myself to help you know like what are these different limitations so that you can stay as compliant as possible. Now these strategies will allow you to control when and how much tax you owe. Next thing is some common tax deductions. So deductions lower your taxable income. Now, some of the most valuable ones, and like there's a lot, right? So the tax book is fairly thick, right? So just some like the most common ones, right? And the ones that you can really get a lot of usage out of. Number one is home office deduction. So if you work from home, you can deduct a portion of your rent, mortgage, utilities, and your internet. Now, a lot of people kind of get this wrong because they try and take like their whole rent or their whole like mortgage and they try and like do it all. But you can only really take the portions of your house and the like different utilities for what was used for your business. So the trick when it comes to tax planning is that there's a lot of different deductions you can do, but you have to do it within a certain amount of like there's a certain amount of leeway you have, right? But you don't just want to be just completely reckless with it, right? So another way that you can do is kind of like some people try and do like business meals and stuff like that. And they try and take like maybe they'll spend like $10,000 worth of business meals during the year. And they'll try and deduct all of that to, reduce how much they have to pay in taxes. But there are limits to that, and there's a percentage of those business meals you can actually take. And what qualifies for a business meal, there are some like strictness within there, right? Now, depending on how aggressive your tax strategist is, they could do some stuff, but there's always a limit. So you need to be able to combine as many different tax deductions you possibly can together while staying in the rules of each one, so they all add up to the full picture of you're reducing your tax liability. Okay. Another thing that people do is like business expenses. So if you're an entrepreneur like myself, you can deduct advertising, software, office supplies, and even some travel costs. Again, there are limitations, and like you have to be able to prove that like you actually traveled due to like your business, not just just going and taking the family out to Ibiza for whatever. Next thing is like medical expenses. So if out-of-pocket medical costs exceed a certain percentage of your income, you can actually deduct them. Now, keeping track of eligible deductions throughout the year can lead to significant tax savings. Okay, so it's super important to be able to either have like maybe you have someone who's doing your bookkeeping. We offer bookkeeping services within our firm, or if you have like a mess of your books, like we will actually go and we call it compilation cleanup. So we basically just take all the mess, we organize it so we can actually start moving forward and helping you understand like what is the most optimal tax plan for you by looking at all the different deductions we could be potentially taking, or some deductions that you may never even heard of or even thought of before that we can utilize for your benefit. Next thing is going to be tax credits that save you money. So, unlike deductions, which can reduce taxable income, tax credits provide a dollar for dollar reduction in your tax bill. So some of the most valuable credits include like earned income tax credits, so EITC for short. So for low to moderate income workers, this can provide thousands in tax savings. Now, the thing with like tax credits is like it's really about like if you qualify for certain things, and it's kind of like when I was trying to apply for like certain financial aid for like different programs in college, like I was making a good amount of money while I was still in college, so I didn't qualify for a lot of like the different like grants and stuff that were available. It's kind of similar here, where it's like you have to really understand like which ones are the applicable ones for you, and that's why it's like you don't want your full-time job to be like researching tax credits. Leave it to someone who actually does that for like a living. That's all we do, right? Next thing is like child tax credits. So if you have children, you may qualify for up to $2,000 per child in credits. Next thing is like an energy efficiency credit. So installing solar panels, energy efficient appliances, or buying an electric vehicle can qualify you for credits. So, it's actually kind of interesting because then the people that are knocking on your door, at all hours of the day trying to sell you a solar panel, they could actually have a usage if done correctly and if you've done the proper research for it. So taking advantage of these credits can drastically lower what you owe. Next thing is going to be like tax advantage retirement accounts. So saving for retirement can also reduce your tax bills. So for example, your 401k and IRA, like your traditional IRA, contributions lower your taxable income and grow at a tax deferred kind of like rate. Now, next thing is like your Roth IRA. Now, contributions aren't tax deductibles, but withdrawals in retirement are tax free. So if you need some help like learning about that, like I would probably go see a financial advisor, financial planner. I'm more focused on the tax and like elements of it and like what it would do for you. But if you actually want to learn how to like set up the specific ones you need to, then I would see a financial advisor. Now, next thing is gonna be like a backdoor Roth IRA. So this is a strategy for high income earners to convert traditional IRA funds into a Roth IRA for tax-free growth. Now, contributing to retirement accounts is a simple yet effective way to keep more of your money in your pocket. Don't kind of sleep on these. Like everything can add up if done correctly. Next thing would be capital gains and investment strategy. So if you invest, knowing how capital gains works and how capital gains taxes work is crucial. So there are different types of capital gains taxes. There's short-term capital gains, so that's investments held for less than like a year, and they're generally taxed at your ordinary income tax rate. Now, another one's gonna be like long-term capital gains, so investments that are held for over a year. So they generally have much lower tax rates. Now, one thing to know is like if you are like, you're a business owner and maybe you start operating within like day trading, you see like there's some different like stock investments, and maybe you make, like what is it, five day trades in a row and you become a pattern day trader. There's a lot of fear around that because like you might have to pay more in taxes like if you plan for it ahead of time and you can basically predict how much you think you're going to make, it doesn't necessarily have to impact you that bad. One thing that I would kind of recommend is if you do have a business, it's better to make your gains and losses out of a business than on like maybe just like the personal like your personal investment account. If you become a pattern day trader, I would recommend, really incorporating that and turning it into an actual business so that you can have a little bit more deductions and a little bit more ability to lower the taxes that are going to be coming on them. Because yeah, it can be more expensive. That's one thing. Like before I learned all this about tax strategy, right? My business was doing really well, and I made about I think it was like 80K from like day trading one year, and it was just like it just totally messed up my tax plan. I didn't even realize like that was a thing. And that's one reason why I started learning all this about like taxes because it was really about how to lower my tax bill so I didn't have to pay a lot in taxes. So next thing, some strategies to reduce taxes on investment include tax loss harvesting. That's selling losing investments to offset gains. So, like sometimes like you might see people like Nancy Pelosi whenever so some people like her or hate her, right? She's one of the best like stock traders around right now, like one of the best like traders. And it's because her husband owns like the investment firm. They have like, some people say like different levels of information that might be inside of a house versus outside of a house. We'll keep that for a different discussion. But sometimes you might see her sell stocks for loss, and people are like, wait, but if she knows what's going on, like, why is she selling for loss? Oftentimes, it's going to be around specific tax deadlines so that they don't have to pay quite as much in taxes. That's called tax loss harvesting. Next thing are like opportunity zone investments. So investing in designated areas to like defer and reduce capital gains tax are also a very important thing to kind of like be aware of and just to really understand like what's available to you is really like the key thing of this. Is like knowing what's available to you. If I know that something exists, I can go and attack. I can go and attack mode. If I don't, then I'm always been on my back foot and I'm always playing defense. You don't want to be playing defense as a business owner unless you have to, right? You always want to know what is my downside, what is at stake, and what can I gain. And if your downside is covered and what's at stake is not for something that's very permanent, now you can be able to attack. Ah. Next thing, so structuring your business for tax savings. Okay, so business owners can also lower taxes significantly by choosing the right structure. So S corp versus like LLC. So an S corp allows you to pay yourself a reasonable salary while taking the rest as distributions, which aren't subject to self-employment tax. Now, another thing that like so also and like it doesn't mean you have to always just like change to an S corp. Sometimes you can have your LLC but have it taxed as an S corp. And there are pros and cons to each one. So I would probably recommend like that's something we talk about inside of our service to kind of help you reduce your tax, our tax planning service. Next is qualified business income deduction. So this allows business owners to deduct up to 20% of their qualified business income. We can talk about qualified means in a different kind of discussion. But really, learning how to structure your business correctly can result in major tax savings. Now, if you don't know, like even how to incorporate, like maybe you've been doing this stuff as like a sole proprietor and you don't really have an LLC, I'd probably recommend minimum LLC. But if you want to go from an LLC to an S corp, we can help you go in and change that corporation status. Next thing, so writing off business expenses. So if you own a business, nearly every expense related to running it can be deducted. So we kind of talked about some deductions before, but just going a little bit deeper. So office rent and equipment. So computers, software, and office space are deductible. Next thing, vehicle deduction. So if you use your car for business, you can do mileage and fuel can be deducted. Also, meals and entertainment. So business meals again are going to be about 50% deductible. So proper, again, that's why proper bookkeeping is so important because a lot of business owners, what happens, like you're spending throughout the year and like as long as there's like, money in the account at the end of the year, you're happy. But what if you could have doubled how much money you actually like kept in your bank account by the end of the year and then still paid less in taxes than what you're paying now? That's why you have to have this stuff just like organized and just ready to go. Next thing is estate and gift planning. So, if you have significant assets, estate planning helps to minimize taxes. So, gift tax exclusion. So, you can gift up to $17,000 per person per year tax free. Next are trusts. So, setting up a trust can protect assets and reduce estate tax burdens. Next to me, like gifting appreciated assets. So, instead of selling your stocks and paying capital gains, you can gift them to your heirs in lower tax brackets. Okay, so again, proper tax planning really it's really the transference of wealth without necessarily having to have a very taxable like event. Or if there is a taxable event, if we can plan for it, we can minimize it as much as possible. Okay, because all about like keeping what you're making. It's all about keeping, right? Warren Buffett talks about it's not about what you make, it's about what you keep, right? And so I know some people that are really great at like, they're earners, right? We call them earners, where they're really good at making the money, but at the end of the day, they either have like zero savings, they have really nothing really to show for it at the end of the day, right? They have a couple depreciating assets, maybe they have a nice house, but and they don't really have that much stuff to like to pass down. And it's not just about, making money for ourselves, but it's also about like having really good assets and just stuff we can kind of pass down to our children so that our family is moving forward over and over again. You know what I mean? That's the main thing. That's like really why we do this is like to really protect you and kind of like give you a way to move this stuff on to the next generation. Next thing, so tax-free income strategies. So certain types of income aren't taxed at all. So municipal bonds, interest earned on these are usually tax-free. Next thing are HSA or health saving accounts, and the contributions are tax deductible, they grow tax-free, and can be withdrawn tax-free from medical expenses. Next thing are life insurance benefits. So death benefits from life insurance policies are tax-free. So if you don't have a life insurance policy, I recommend maybe going and finding a licensed like life insurance agent to really help you with that. Next thing, so like incorporating tax-free income sources into your financial plan is a great way to build wealth efficiently. So next, your action plan for your saving your taxes and just really making sure that we're maximizing our tax savings for this year. So number one, to implement these strategies, I want you to review your tax situation. So identify opportunities for deductions and credits. Number two, meet with the tax professional. So if you don't have a tax professional, and I'm not talking about a CPA, right? CPAs, they will do a lot more in terms of compliance and keep you in compliance, but they're not really going to help you minimize your tax burdens in most cases. Some CPAs do have like, a little bit of a tax background and they are kind of a tax strategist, but the majority are not. I cannot tell you the number of CPAs back when I was trying to like really learn this stuff when I was running my first two businesses, right? I was like, okay, so how can I reduce this? Like, oh, just be happy that you're in the United States and like, just pay the most in taxes. That just means you're successful. It's like, bro, I understand I'm successful. I want to be more successful. I don't want to like, pay all this money in taxes. And I mean, I could be using that for a vacation. I could be using that for a new car, but you know what I mean? So I don't want to have like this dead money. So really understanding like who is a good tax strategist and really understanding because like it's important to meet with a tax professional because tax laws are changing. They always change, right? Every single year is different strategies change every single day, every single month. We have different people in office, right, that are enacting different things that are around, right? An expert can help you optimize your savings. So I would take action now, and many tax saving opportunities must be implemented before year end. I would not wait till like the end of the year or like January and February to like really get this stuff started. The earlier you start, the more you can save. Okay. So in conclusion, by taking control of your tax situation, you can keep more of your income and build long-term wealth. Now, if you want some personalized guidance, schedule a consultation today so I can see exactly how much we can help you save on your taxes. Okay. Also, don't forget to like, subscribe, and hit the notification bell so you don't miss future tax saving tips. Okay, thank you so much for watching, and I will see you inside the next video, or I'd love to see you inside of our next call when we speak about how we can help you out. Okay, talk to you soon. Have a good one.